All righty. Fantastic. I think we should be live now. So what we'll be doing just for the next 30 seconds or 1 minute before we start with the introductions and the webinar is just waiting for more people to join. But in the meantime, those of you who have joined, we've left myself and the two panelists on the first page, just so you can have a little look at who's going to be talking today while we wait for more people to attend. Just some very quick housekeeping for those of you that are here already. This webinar will last about 45 minutes. It's going to be a panel discussion, so I will be operating as a moderator and asking questions to Georg and Matthias. And then if you have any questions in the meantime, please use the chat box provided and you can pop in your questions there. We have some slides to guide the discussion, but this will primarily be a Q&A sort of session. So I will be asking questions with the slides as prompts, and Georg and Matthias will be answering with their own opinions. Let me just have a little look at the participants that are coming. All right, I think what we can do is just get started with the introduction so that you're not just sitting there, both of you, and then we can get cracking with the webinar. So thank you everybody for joining us to our webinar today, Biometrics in Banking, Reducing Costs with Self-Service Account Recovery. So I'm Alex, I work in the marketing team here at Keyless, and I'm going to be operating as the moderator for this webinar. And I am delighted to have Georg and Matthias joining us today. Matthias, you may recognize already, but Georg is the former general manager at N26, the German neobank, and is now an advisor on digital banking. Georg, thank you so much for joining us. It's a real honor to have you.
Thanks a lot for having me. Thank you.
And Matthias, those of you who know him already, or those of you who don't, is our sales director for DAC and CEE. Thank you, Matthias, for joining us.
Thanks, Alex. Thanks, everyone, for having me. And special thanks to Georg for joining us today. Really looking forward to this.
Yeah, we're really excited to have you on with us. Thank you, Georg.
Likewise.
Right, so let's just crack on with it. Let's start straight away. This is a webinar about account recovery, reducing costs. So I thought I would just start with just a couple of lines about account recovery. Practically on a personal level, everyone I know has some form of bad experience with account recovery, a nightmare story. I use a bank, we're all bank users here. And if we lose access to our credentials, our PINs, there's an element where we're going to dread what we're going to have to do to get our account back, to recover these credentials. Might be easy, might not be. And banks, of course, know this. They don't want to irritate their customers, but they do still want to provide a strong enough recovery method. So within this context, Georg, I'll ask the first question to you. In your former role, as you were leading a bank and in your capacity as an advisor, what has your experience been with account recovery going south?
So generally speaking, the question is actually, what is account recovery? That means typically a customer wants to change their phone. They purchase a new phone. They need to pair it with the new bank account, They want to, let's say, add a new email address or change the email address or phone number. The problem with that is these are all totally legitimate ways of just changing something tiny in your life and you want to add this to your bank account. The problem to that is this is the typical entry point for fraudsters as well. And for banks, the big question is how do you differentiate between a totally legitimate customer that just got a new iPhone for Christmas or a fraudster that is legitimately trying to get access to the bank account. The banks have a couple of ways to do that, and we'll get into that in a second. But the question is, what happens if a fraudster is able to have access at one's bank account? The reality is, the moment a fraudster is able to pair, let's say, add a different email address and delete the old one, and the moment they're able to pair a new phone, that very moment, the fraudster takes full control over their bank account. He or she is immediately going to delete all the other access points for the legitimate customer. And when a transaction is happening out of the account, the actual customer is not even going to realize that something has happened to the account. And that takes only a matter of minutes. So, and very often fraudsters act in the middle of the night. So it's very likely that the customer isn't currently present on the email account or on the phone seeing a potential push notification, but it just completely goes unnoticed. Or in some cases, they even abuse the customer's unattentiveness to potentially just accept a push notification, which eventually just ends or confirms the pairing of the new phone. So generally speaking, for a bank as well as a customer, a fraudulent account recovery is an absolute nightmare scenario, and it can really become a total death spiral where not only the customer loses complete control over the account, but the bank suddenly is hosting a fraudster that might use this newly hijacked bank account either for criminal activities, such as actual other types of fraud, or actual money laundering. And in both cases, it's a disaster for the customer and the bank.
Like a gateway. I mean, yeah. So in terms of security, poor account recovery process are incredibly damaging. They can be, the gateway to having effectively a fraudster in your system. Matthias, from a vendor's perspective, what has your experience been with this, with a poor account recovery process? Is security the key driver here? Is this the most important thing?
So, I mean, absolutely, I completely agree with Georg just said. I think security, and this is as a security company, that's of utmost of our interest. But I think recovery also has a lot of implications on customer satisfaction and user experience. So let me quickly give you a story, a personal story that I experienced. So last year I signed up to a famous neo broker, but I didn't use the account very often, right? A couple of weeks ago, I saw a promotion and I wanted to log in again. But in that case, I completely forgot the PIN that they asked me to enter. And I experienced exactly what Georg just mentioned. I changed the phone number. So I had not access to the specific phone number anymore. And the only way to gain access to account was to go through another complete KYC or digital identity verification process. But it didn't work out as expected, so I had to go to the customer support, write an email, explain the situation, and what I got back was basically the same instructions that I had tried to use before. So it was a very frustrating process. It took me, I really think, a week or so to gain access, to change the PIN, to confirm the new phone number. So from a vendor, I know how difficult it is, but also as a personal experience, I know how this pure experience are as a user.
Yeah, we've all got stories like this. And it must be sort of, in a weird way, Matthias, a little bit bittersweet, the fact that you're working for a company that's trying to improve this process, and then on a personal level, you actually end up experiencing it yourself. I think that's,
research.
it's like the IT company that can't work out IT out. It kind of makes it all the more, all the more difficult in some ways. Great. So thanks for your answers. Let's move on to the next slide. So assuming you can see this here, Georg, what we've done is Matthias and I spoke before the webinar, and we have identified different ways that we have seen banks recover accounts. So we've written them here on the right-hand side. Georg, in your experience working for a leading digital bank, and of course now that you have a lot more individual conversations about this topic with advisors, as an advisor, which of these have you seen used the most for account recovery, and how effective were they for the issue that they were trying to solve or the situation they were used for?
Yeah. So I think generally speaking, we can differentiate between two types of companies. Like one, if we talk typical the digital banks that are trying to be fully digital, as well as other, let's say, e-commerce platforms or let's say non-financial institutions, they typically try to rely on more or less digital means, including SMS, OTPs. The other aspect is standard banks, traditional banks, that very often still, even if most of their other processes are fully digitized, strangely, the account recovery process is still one of the last processes to be digitized, and very often still relies on calling a hotline or walking into a bank branch. The interesting aspect is that, I mean, while the traditional banks, that's extremely expensive process, and really actually makes many customers hate their existing banks, because truly, like, who really enjoys walking into a bank branch? But on the other side, even the digital banks not always have totally figured it out how to do it. And for example, SMS and email, which are still, I would say, two of the most typical authentication methods. Especially SMS is nowadays considered to be extremely, I would say, insecure, because it can be spoofed and it can be also rerouted. And overall, nowadays, a lot of the scam SMS that we are getting essentially tries to imitate exactly these authentication SMS. So so the old OTP, so meaning SMS, email, and sometimes getting a push notification on your phone, essentially that's kind of how most banks are doing it in the modern age, except for those that still have branches. They typically still rely on hotlines and branches. Both have security flaws, both have high costs involved, and there have been a lot of concerns of how to improve that, both in terms of speed as well as in terms of user experience, because it's not a great user experience at the moment. And it has maybe to add one more thought, one of the most secure ways of authentication is sending a push notification to the banking app, but that requires that when you, for example, switch your phone, that you still have access to the old phone number, and the old email address. And we've seen that about in 30% of all cases where customers are switching their phone, they don't have access anymore to the old phone. So the main gateway is actually breaking down in 30% of all cases, and that's a huge number of cases. And that, of course, provides a perfect gateway for fraudsters to access one's bank account.
Yeah, thank you for the answer, Georg. I mean, there's so much to unpack there, isn't it? The difference between neobanks and traditional banks, and simply the fact that some, traditional banks have branches and neobanks don't, so they rely on different methods. And then, yeah, that's a great fact. But
by the way, just to add one more thought, they have actually seen one more authentication method here, which was with Amazon, and it was a terrible one, absolutely terrible one. If you don't have access to your old phone number, even if you know the password, you know the email address, but you don't have access to your phone number anymore, they're going to ask you authentication questions about the things you purchased in the past 6 months. So essentially, how much did you spend on that? What items did you buy? Like, what color was maybe this dress you bought? But the problem with that is, if you didn't make any purchases in the last 6 months, that's a dead end. So basically, you will not be able to be authenticated, because because the customer service agents only have access for 6 months purchase history. And I actually ran myself into that situation with my old business account. We're not able to recover it anymore.
Yeah. I mean, that sounds, that's crazy in some ways, without having any other way of saying it. Thank you for sharing your thoughts. Matthias, I'll put this to you now. What are your thoughts? Do you agree with this? Have you seen this in your experience working for Keyless?
Yes, and I think since we have a lot of listeners also from the DACH or German-speaking region, I think one, because prominently here on the second place, a lot of banks are actually sending out activation letters when you apply for a new account. So you have to imagine that you apply for an account, you go there, and then 2, 3, maybe 4 days later, you get a letter by post that you maybe have to scan a QR code or type in a specific password into a website. I mean, besides the fact that this is very costly and a cumbersome process, this is again a security hole. I recently saw legit activation letters looking like legit activation letters from a leading German bank with the aim to trick you into a phishing website. So all of these methods, all of these OTPs, or even if you are not a traditional bank without having the option to visit the branch, going through another KYC processes, that's what exists today, and that leads to a lot of heavy operational burden.
Yeah, absolutely.
Just to share a few more examples, it's like when I was general manager at N26, I held a lot of customer interviews and just talked to customers to understand what their problems is that we were solving. And one thing that I hadn't realized is how many customers were opening a bank account with N26, that the sole reason, the trigger point why they did it, is because they had lost access to their bank account, at least temporarily. There's, for example, examples of someone getting a new phone for Christmas, let's say, and then heading on a Christmas vacation a few days afterwards. So they try to pair it essentially the day after they receive it. And then they realize in order to pair it with their new phone, they need a certain access code, which they just don't have. You only can either at some point, they might have received it several years earlier, which by itself is already a security risk because storing a password in a written form somewhere is not very safe. But the other aspect is the only way to get it, then if you don't have it, is these activation letters. And they typically take 3 days, maybe a week. And many people don't have that. So customers are sharing their experience that they were a customer at a different bank and they were okay with that bank because they just didn't care much about their bank. They weren't even digital natives at all. They just didn't care about their bank and they had only one bank. But then they realized they couldn't go on vacation without having access to any bank account. So essentially what some people just did is it was easier and cheaper and quicker to open a brand new N26 account in the evening, maybe like Saturday evening, rather than waiting until the activation letter of the bank comes, which would have been too late before their vacation. And there are many such small, seemingly negligible trigger points, which seem negligible for the large banks, but very often are a huge annoyance for customers. And in fact, sometimes even like total game changers, which essentially forces them to experiment and try out a new bank just because it's a necessity.
Yeah.
Gosh, the neobank sort of picking up the people, you know, sort of customers from the traditional banks through the account recovery use case because they don't have the right account recovery processes or the suitable ones in place. That's super interesting.
Asking someone to visit the branch, right, and go to the
Yeah.
branch and show up your ID and tell you, hey, it's me who wants to access your app, is very secure, but it is also very, very cumbersome. So yeah.
So let's jump to the next slide. So what we've got for this slide here is, you know, the title of this webinar is, you know, Biometrics in Banking, reducing costs with self-service account recovery. So what I wanted to do actually is just put this slide, this question to you, Georg. Are you able, when we talk about costs and specifically the cost of authentication in the banking industry, what are we actually talking about? Georg, how would you define cost from a banking perspective?
Yeah. So generally speaking, I would speak of 3 different types of costs. On the one side, there's the physical costs, which includes the bank branches, the customer service team, the hotline that you have, maybe the activation letters. The second aspect are the fraud costs. So that's the real cost of any fraud that might occur. That includes also regulatory penalties, for example. And the third, but not negligible cost is the user experience or if there is a lack thereof, the loss of customers because of a lack of user experience. And the interesting aspect is authentication, since it isn't, except for the transaction authentication, which every bank fully understands, I would say more, let's say, irregular types of authentication, especially account recovery, are costs that many banks don't optimize for because it's just not part of the typical user journey, which a lot of banks map. In my opinion, that's a big miss. Because statistically speaking, about everyone gets, let's say, a new phone every 4 or 5 years, which essentially means that 20 to 25% of all of your customers are going to switch their account to a new phone in any given year. And that's an enormous number of customers. In the case of N26, for example, we're speaking of 2 to 2.5 million customers every single year switching their account. In addition, you, of course, have other authentication aspects, but this is an important one. And of course, people also might move their apartment, have a new address, maybe have a new email address, and certainly could change their phone number. And the interesting aspect is, so we talk about physical cost. The physical cost is that's the one aspect that banks really have on their radar. They try to optimize for it, but many large traditional banks just accepted that branches are there for many reasons, not just authentications. But the fewer customers actually come to a bank branch, the more the focus shifts towards authentication, which becomes one of the primary reasons suddenly why you still have bank branches for certain security processes, which just don't have an alternative at the moment, no plan B. The customer service center, that's something that is also affecting digital banks. And that's an important aspect of the service of a digital bank, but it's a very expensive one if you would do something so repetitive as an account recovery, and it's repetitive and at the same time extremely crucial. And the truth is, we made some very intense market research here, and what we learned about it is a great interaction with your customer service can make a customer happier than if a customer never had any interaction in the first place. But this was only referring to special issues. This wasn't referring to account recovery, because when we then went into depth into the topic of account recovery, most customers were saying they were really surprised that they had to call customer service for a simple change of phone number or change of the phone itself. So there's just not much understanding anymore from customers that something so usual in everyone's lives still requires any human interaction. And that's where banks can shine. Focus your customer service on the problems that actually matter and involve and require human interactions, and all the recurring processes like account recovery rather shift towards an automated process that does not require any human interaction, and ideally can be done 24/7 and really, really quickly, ideally.
And if I may add on this, so we know from the customers we talked to and the service that also we did this, that even for a digital bank, right, if you have to get in contact with your support, every contact request can cost you between at least 4 and 8 euros, right? So imagine that this amount of recovery use case and the bulk of these requests, at least 50%, are related to password issues or PIN issues. So you're not able to sell or upsell a service, right? Or you just need to figure out how the user can get access to the bank account. So it is a heavy burden on operations. I think for traditional banks, this process will probably even be 10 times more costly. So yeah, given the amount of calls, given the amount of requests we see, this makes a large sum of the expenses. So and yeah, every human mediated process like a call center also again leaves you open for any additional security holes. Because what you do at the end is you ask the user some specific security questions, right? So things that people need to know. So you rely on knowledge factors to actually help them with another knowledge factor to recover the account. So it leaves you open for additional account takeover fraud and potentially leaves you to more costs because your customers fall victim to fraud. So yeah, I think this all has a negative impact also on the UX front. That you know, when you are not have a nice way of interacting with a customer, this leaves opportunities for interacting with other digital services, and there is a missed growth opportunity.
By the way, for any bank executive here, I would highly recommend you try to spend half a day once with your customer service team. Even if that might seem like a waste of time, like you're going to learn so much from them. And just first of all, just shadow them, see how they act, see the process they're following when they're getting a call or a chat. But most importantly, try to get them in a room for, let's say, a coffee and ask some of the people, basically, what are the most typical requests they're getting? And then second question, what are the most annoying requests they're getting? And then last, ask them, what could you automate? Like, what are the requests that you can automate? I almost would bet that a lot of the replies that you're getting from customer service agents are about the switching a phone number, switching a phone, or changing the address, because these are some of the most recurring, repetitive requests they're getting. At the same time, these people they're really smart. They understand what can be automated, sometimes much better than the managers themselves. So spending a half a day with them will be an eye-opener in terms of optimization and cost savings.
And is that something that you did when you were at N26 then, Georg?
Yeah, absolutely. I mean, I had monthly sessions with my customer service team. I essentially getting them together. And I had always, on one side, I was presenting updates to them, something that was upcoming. So for example, any new marketing campaign, any new product that would be coming, I made sure that they were aware of that at least a few weeks ahead of time so that they could prepare for it and also be trained for it. But it had not just a training aspect, but there was also a certain aspect involved of motivating your own team members to make sure that they are aware of things that happen. Like, give you some examples. It's like if there's a new billboard or TV campaign, you might think that this is not relevant for customer service agents, but yeah, it does. They get requests on that. They get some phone calls on that, like, what do you mean with this billboard slogan? Like, what does it mean? Like, or why do you spend money on advertisement? Like, you get such questions, and your customer service agents need to be prepared for that. At the same time, it was always, first half was me presenting, but the second half was Q&A, where I could ask them questions and they could ask me questions. And in all honesty, I probably learned more from them than they did from me.
Yeah, wow. Well, you heard it here first. You know, professionals at traditional banks, straight from the mouth of the GM of N26. No, thank you for that insight. That was really insightful. Thank you. So let's move on to the next slide. We're about 25, 27 minutes in. We've got a few slides left, so I think we're making good pace. There have been a couple of raised hands, by the way, just as an announcement. Please ask questions in the chat, and we will try to get to them there rather than raising hands. All right, so let's talk a little bit about biometrics. You know, Keyless is a biometric authentication company, and what we want to talk about is biometrics, the authentication method that can actually verify the genuine identity of the person that's trying to access the bank. So, Matthias, are you able to just give us a bit of an overview of the existing biometric systems that are available for account recovery for banks? What's out there at the moment that banks can use?
Sure, absolutely. Maybe let's give you a more general view, a more holistic view. So when we talk about biometric authentication, we mean the use of human traits for authentication, right? So it could be a physical trait like my face or a fingerprint, or we talk about behavioral traits, right? Like keystroke patterns. So what is important is that these traits are distinctive. And at Keyless, we focus on the face to authenticate. And just to explain what happens when a user enrolls the very first time, the biometric features are getting extracted and the biometric sample is stored. So during the authentication process, a system compares a template with a new biometric sample. And if it's a match, you have a positive result. And generally, there are two ways or two concepts out there that are currently used and predominantly used in the banking sector. You have local biometrics, or you call it also device native biometrics. For example, Face ID, I think we are all familiar with. Or you use cloud-based or also called centralized biometrics. So the template of your face is stored somewhere on a server. If you look at local or on-device biometrics, the good thing is it's very private, right? The data never leaves the device, and it's super quick and fast. But it's also the downside. If the data never leaves the device, your template can be lost in case your device is lost, right? And what is very important to mention is that if you look, for example, Face ID or any other proprietary system, there is a link or there's a weak link between the identity and the biometric data. So talking about the recovery use cases, if you lose access to a device or you don't have the PIN anymore, you cannot recover your account. Now, on the cloud side, if you store something on the server, it's agnostic from any device. You don't need to re-enroll your face anymore. And it allows a stronger link between the device, the identity, and the biometric. Now, the issue with centralized or cloud-based biometric is there are a lot of privacy challenges, and traditional methods don't basically encrypt data in use. And think of if you have sensitive data, like a template of your face stored on a server, in case of a data breach, you cannot reset or change it like maybe a password. So what is important to say, and maybe where keyless comes in, is there is a third way, right? There could be a third way, which we call, or which even Gartner categorized as decentralized biometrics. What we mean by that is that no single party has complete control over the biometric information. So it's split and processed in a way to ensure no single point of vulnerability. And what we have done, and what Keyless is focusing on, is taking both advantages of both worlds, like the speed, the usability of private or local biometrics, with the advantages of device agnostic biometric, but in a way that no data is stored. We call that zero knowledge biometric. So today we have predominantly these two categories, but we believe there could be a third way, which is using your biometric template in such a way that from a legal and from a data protection point of view, no data is stored. So yeah, that's what exists today.
So the best of both worlds. Yeah.
Yeah, and I think when we talk about biometrics in general, I think it's a great way because you don't need to train or educate the user. It's just there. It's like I don't know how many times in the last hour I checked my phone, right? And I just use, my local, since I'm an iPhone user, so I use Face ID. So it's there, right? Users are trained, users are educated. But as a bank, and as a licensed or regulated entity, I want to know who you are behind the device, not just that someone has access to the device. So yeah, looking at both sides of the world, I think it's a good way of looking at it.
So if I can maybe just quickly try and summarize that, is you've got local biometrics, which like Face ID or passkeys, which the data stays on the device, and these are generally seen as more private because it never leaves. Then you've got cloud-based biometrics, which generally speaking are slightly more user-friendly because you don't rely on the device. And at the same time, with local biometrics, the template is tied to the device and not often the actual template used by the bank. So there's a third. What Keyless is doing is we are introducing a third form of biometrics, so a decentralized approach, which effectively gives the user experience benefits of cloud-based biometrics with the privacy benefits of local biometrics.
Yeah, think of it as you are in control of the biometric process, right? So you're not dependent on the device, you're not dependent on the manufacturer. You are in control of it, but without exposing any PII or data privacy risks. And that's, I think, how to best put it.
So Georg, this is obviously what Keyless does. Have you used I know we spoke previously and you said you haven't used biometrics specifically for account recovery, but just in general, what has your experiences been with using biometrics?
Yeah. So actually, for most banks, even traditional banks, the first gateway to biometrics is Face ID at the iPhone. The interesting aspect is that one of the reasons why, and it's, first of all, it's very convenient, great way of using it instead of your password. But the problem is rather, it's really just that. It's basically a substitution to your password. But it doesn't substitute additional layers of security. So especially when we come to, let's say, banks where you have a password to enter the bank account, but typically you have either a transaction PIN or another authentication method to release and confirm a transaction. You typically, as a bank, want to use two different methods that aren't the same. So even if a fraudster is able to access the account, they don't necessarily are immediately able to do everything else in the bank account. And that's where the misconception with Face ID come in, because Face ID is a system of Apple. I as a bank have zero control over that. And if ever, for example, a fraudster is able to access someone's account through Face ID and then does a lot of let's say, activities that are highly illegal. And then the regulator or the supervisory authority would ask me as a bank, like, why did you let this fraudster access the bank account? As a bank, I can only say, because Apple confirmed that it's the right person, but I can't provide any proof. I don't have the biometric data from Apple. I don't have a picture. I literally just don't have anything. The only thing I have is I can claim that Apple permitted me to let this person enter it. And that's a very poor way of authenticating a customer's identity, because as a bank, I have much stricter compliance standards than just your everyday e-commerce shop that might be happy with an Apple Face ID. So this is, I would say, one of the biggest misconceptions, that while Face ID is some sort of biometric, is actually a very limited version of it, and is definitely not safe or compliant enough for banks to be used for proper authentication of their customers. And that's where a lot of, especially digital banks nowadays, are investing into biometric as where they take control over the biometric data, or in, as you mentioned it before, this decentralized version of biometrics, where basically no single party has all the knowledge of biometrics, but rather you have almost like a key and a lock, and neither of them is enough to open the gate, but only together they match, but no single party has both. And so that's why I think we're going to see that biometrics is going to be adopted by more and more modern banks, not just the digital ones, but any bank. And on the other side, I believe in the long term, biometric has the potential to really become the standard for authentication, because that's the only truly secure version of it. And to top it up, it's likely going to be biometrics with some sort of other random factors, so that banks are ideally keeping it proprietary, but biometrics is essentially going to be the standard by default.
Yeah, basically
absolutely.
a hybrid model, right? That uses that have distinctive factors independent from each other, proving who you are, right? Your real genuine identity, but also proving something else, like, for example, the possession of your device distinctly from one another, and make sure to really have ownership, especially with the liability shifting from the consumer to the bank, proving based on audit trails, is it really you who did the payment? Friendly fraud, app payment push fraud, we see a lot of issues here that can be solved.
Yeah. And Georg, something that you said made me think of a phrase, which is one size doesn't fit all. What a bank needs, the requirements for security and privacy are going to be completely different to an e-commerce vendor. So a solution like local biometrics offered by a single, company like Apple is just not going to fit for everybody.
Yep. Well said.
Great. So we've got the final slide here before we're going to answer a couple of questions. So without further ado, the last slide we want to talk about is integration and the cost of actually integrating biometrics into a bank. So we've spoken about existing methods, how biometrics are often cheaper, faster, more secure than existing methods. But starting broadly, Georg, this one's for you. What are the challenges with introducing new authentication methods into a banking system?
Yeah. So generally speaking, I think the biggest cost in changing one's processes for a bank isn't the software. It's the migration cost, and on the other side, basically the internal training cost to make sure that the internal processes work. It's very rarely the software itself. It's always a combination of all of it, and definitely. I mean, I don't know. I mean, I'm sure you can talk about the way how you're then supporting that. But generally speaking, I would always highly recommend when you start the integration phase, you can ideally start with a POC where you essentially roll out the system to a limited number of customers in either one geography or one segment where you believe that these customers are perfect test subjects, and then compare it with existing OTP methodology. As a traditional bank, you could, for example, start with essentially rolling it out to your younger audiences, where you're more certain that they will be familiar with the smartphone and biometrics, and then roll it out to everyone. But either way, I would always recommend doing it step by step, because that will drastically lower the cost of friction, and it will drastically also lower the cost of training that you have, because a lot of the training is going to happen on the job while you're in this test phase. And that typically, I've seen this now with several banks, that typically works really well. And to a certain extent, also keeps the integration phase costs low.
Yeah.
And on the other side, if it's a strong software, it actually becomes a business case. You save quite a lot on, let's say, authentication letters, fewer customer service calls, etc. So I've seen business cases where that can work within 6 to 12 months, where actually you essentially the integration pays for itself quite quickly.
That's often a use case that we speak to banks about, is actually how account recovery can save the costs. Matthias, yeah, from a vendor side, are you able to talk about integrating biometric authentication and some of the challenges from your perspective that banks have had with this?
Yeah, I think just to make clear that I think if you look at authentication or methods to verify someone's identity, there is a weakness in our system, right? Because there is a huge focus on the initial enrollment, right? On the initial onboarding. You go through these KYC processes, but there is a lack of ensuring that this verified identity is used for consistently authenticating in the future. So as a regulated entity, you have to go through this process. You need to know who you are, but then you fall back to weak authentication mechanisms, right? Verifying that previously verified identity with OTPs, SMS, any other means that we just talked about. So I think this signing up and signing in, this shouldn't be viewed as a distinct process. It should be seen as the same problem. And what we can do here as a vendor in that case, we can help institutions to use the verified selfie or the verified picture that has been used for initial onboarding for ongoing authentication. So why should I just, if I lose access to my account or if I don't remember my PIN, go through another onboarding process, right? Why do I need to scan my ID card again? Why do I need to maybe ultimately, visit the branch? I want just to say, it's me, Matthias. That's my face. You have verified the face before. We make sure it's a real user behind the device, so we can verify the genuine identity in our case without ever exposing PII. So bridging that gap between the initial enrollment and the ongoing, let's call it, the continuous identity proofing is something we can help with a service that we call the IDV bridge, making sure that it's always the same person who is recovering the account, who is proving the payment transactions, who wants to log in, that has originally been verified by the KYC partner and vendor.
Yeah, and forgive I've just thought of a bad joke, but it's called know your customer. If you're having to repeat you should already know your customer if they're trying to recover their account. They are still the customer.
Yeah, you don't know. If I type in a username and password and get an OTP, you don't know it's really me, right? So we go back to these fraudster issues and the interception and possibilities to trick and fish someone into a mule account. Sorry. I think, yeah, with using biometrics, you really know it's your customer.
Yeah. And what we're able to do is use the biometrics to authenticate person with the image that's already been taken during the KYC process. There's no need to repeat it, even if password is lost or devices change, etc. That is a really key kind of point that we're trying to get across and speak to as many people about. So we are just at time. However, I've been assured that the webinar won't cut off immediately now that it's 1:45. So I'm just going to ask a couple of questions that were put in the chat. Thank you, everybody, for asking your questions. We can't get to all of them, but I will ask a question from Quentin, who says that we speak about biometrics being the future, which of course it is. So how would you go about explaining this to somebody that's refusing to use it? How much should we force somebody to use a technology that not everybody may be comfortable with? I thought, Georg, maybe this would be a good question to put to you, as you probably kind of had some experiences with this at 1026. Oh, I think you're muted, Georg.
Great question. Thanks a lot. So I think the one aspect to that is, so there are different ways to do that. So first of all, you try to make every process extremely intuitive, and it ideally doesn't feel like a totally different process. So give you an example is you wouldn't actually tell your customer, now here is the biometric authentication step. You wouldn't do that. What you would do, and by the way, for example, what Revolut is doing that is already applying biometrics for authentication is, hey, please quickly smile into the camera so that we know that it's you. That's literally it. And then you proceed. Camera switches on for like 2 seconds. You look into the camera, you smile into the camera. Sometimes they ask you some random questions like, please name the following like few letters, or say the sentence, or say the following 3 or 4 numbers, and that's random. But it doesn't actually feel like a special step or a new technology for the client. It just feels totally authentic, and yeah, I mean, in all honesty, most customers were totally fine with that. So you have to essentially integrate it so seamlessly into the process that it feels totally natural and not like a new technology. The second aspect is, and that's a big game changer and a huge difference to the video ID, video KYC that many of you might know, is people are very uncomfortable psychologically to speak to another human being from an unknown stranger from the KYC center in your own home, because that seems like an invasion of privacy. But biometrics isn't that. And so essentially, you just see yourself, you see a video of yourself rather than another person. That makes a huge difference for people. And last but not least, the reason why I mentioned it before is that you ideally roll it out in a staggered way, is especially when you're a very large traditional bank that has essentially caters everyone from 14 to 99 years old. Typically, you want to roll it out step by step to either different customer segments, customer audiences, or even give people the choice. Because when you have a very, very diverse customer audience, the best way might actually be give people a choice. So for example, say you have the option to go to a bank branch as a fallback option, but here's a much quicker way of basically authenticating this right away. You want to make sure, of course, that the authentication methods are equally safe. But especially with a bank branch, for example, you have one option that still has the perception of some safety, but is vastly more expensive. So you might push for biometrics, but you always give people, especially elderly people, the option to use something by itself. And more and more, you can phase out this plan B option, because people will get used to this new way of doing it anyways, eventually. And by the way, don't underestimate elderly people. There are a ton of people in their 70s that are really passionate about digital banks like N26. Like N26 has an enormous number of retired customers. Don't underestimate elderly people of how they use modern technologies.
No, absolutely not. We've all got stories about sort of grandparents or elderly relatives that are just absolutely smashing it with their iPhones. Brilliant. So we are over time, but we have one question, which I think this one is going to be for Matthias. The question's a bit long, so I'm just going to condense it here, but it's so we're talking about costs of account recovery, but can we talk about costs of biometrics? Sort of how does the pricing model work? Do people have to pay, do organizations have to pay for each sort of authentication that happens?
Yeah, I mean, normally, or what the market normally is offering is a licensing model that gives you a certain fee, about on the user base. So typically, as a SaaS organization and any other in the biometric industry, gives you back a license and should include a certain amount of authentications. For sure, it's debatable. I mean, as always, but I think if you compare it, especially with other methods and other authentication technologies, which are transaction-based, this can be quite attractive, but also predictable, and be clear from a budget perspective that you can count on a specific budget item for a certain period of time. And yeah, I think that's basically what we are also trying to do, is make it very simple, very easy to consume, and also easy to buy, basically. That you don't need to think about any variable costs or any opportunity costs that might arise if you change methods. And just to add on this, using biometrics can solve very different use cases. We talk about account recovery, right, as the topic of this webinar, but you just think about login or payment confirmation transactions or certain step up, like changing personal information. You don't need to always ask a user for a PIN, a password, or something else. You can just ask them, hey, like Georg said, smile into the camera, and we know it's you.
Yeah, exactly. Well, and of course, if you do want to talk about any of this, you know where we are. So I think with that question, I think we're going to wrap up the webinar. Thank you, everybody, for tuning into the webinar and staying right to the end, even though we ran over. There is a couple of questions that we haven't answered yet, but we'll make sure to answer those questions over email afterwards. Everybody's going to receive a recap of this webinar via email shortly. So just to wrap it up, Georg, Matthias, thank you so much for joining the webinar. It's been an absolute honor and a pleasure to have you. Thank you.
Thank you so much.
Thanks a lot.
Brilliant.
Bye.
Thank you, everybody.
Bye-bye.